Today, I want to talk about how Aron has just confirmed the existence of synthetic shares right now in 2024. I also want to talk about how CNBC and Gary Gensler are saying that manipulation doesn't exist, but how South Korea have just identified an additional 7 global banks committing illegal crimes. So stay tuned and let's make some money. Today is also the final day of the birthday sale at the Millionaire Mindset Trading Group. Be sure to use code BIRTHDAY at the checkout for $100 off the price of the lifetime membership or 50% off your first month of the monthly membership. Today we traded XBP for an easy 61% gain over the course of a few hours. But now I'll dive straight in with the key information. So, CNBC have just tweeted this interview saying that manipulation is not allowed in our markets from Gary Gensler, the chairman of the SEC. This is actually a recent tweet from CNBC from the 7th of May 2024 in reference still to meme stocks. So first, let's hear what Gary Gensler has to say about manipulation and how it supposedly doesn't happen in markets.
Manipulation is not allowed in our markets, in essence, misleading the public and with an intent to move that price and so forth. But you are allowed, every individual is allowed to form their own view. And that's one of the beauties of our capital markets. It's that tens of thousands and millions of people can do their own research and form their own views.
What's different about this, though, is that some people think it is a financing vehicle for a political campaign.
Again, I'm not going to speak, as much as you try, I'm not going to speak on any one company, but it's what's important is their disclosures are accurate and that folks aren't in the market front running or trading on insider information or manipulating any one of the thousands of securities that trade.
So there, Gary Gensler has said that manipulation is not allowed and that manipulation and front running does not happen in the US market. But as I said, South Korea have just found illegal short selling in an additional 7 global banks, saying South Korea's financial regulators have so far uncovered $156 million worth of illegal short trades by 9 global investment banks. So again, from May 6th, 2024, South Korea's market watchdog said on Monday it had found breaches of short-selling rules by 7 more banks in the domestic stock market as part of a full-scale investigation into trading practices at foreign investment banks. So they originally found 2 global banks illegally short-selling stocks in October of 2023 and have just found an additional 7 banks on top. Now in this article it doesn't disclose the names of the additional 7 banks identified, but I guess they will in future articles, but we do know that Credit Suisse is one of them, as Credit Suisse is now facing an additional $50 million fine by those South Korean regulators. But as I touched on in my previous video, if these crimes are happening in South Korea, committed by these global investment banks, not just individual banks in South Korea that are South Korean, but committed by global investment banks that also operate in the United States, the exact same crimes are operating here in the US as they are committing over there in South Korea. So it's not that manipulation is not allowed in US markets, it's that manipulation is ignored by the SEC in the US markets. Now let's also talk about this tweet from Aron where he's identified synthetic couches or additional synthetic shares. So Aron tweeted saying, I was going to give away these free gorilla sofas as special drawing prizes for my X or Twitter followers. But alas, they're apparently a digital-only concept sofa, and to my chagrin, they do not yet exist in real life, aka these sofas are synthetic sofas. Now really, there's no need for Aron, the CEO of a movie theatre company, to tweet about sofas that don't exist. Unless he's trying to tell us these gorilla or ape sofas don't exist in real life, and these are effectively 2 synthetic sofas. As April pointed out, she said, Adam, we know the shares they sold us do not exist in real life either, just like these synthetic couches. Also, guys, I wanted to go through the trade we took on XBP for that easy 61% gainer. So I said with XBP, I'm looking for it to pull back to the 48 moving average, hold that area, and then steadily make its way back to the breakout point before exploding over $3.55. I then called out when it touched that 48 moving average, moved back to the breakout point, and told everyone when I was buying XBP. I also gave the immediate targets or resistance areas at $3.73, but then nothing until $4 or $5 per share. It also gave us multiple entry points, pulling back to that 48 moving average, pushing back up, and pulling back to that 48 moving average again, and pushing back up again to $4.69 for a total nearly 62% gain. We can also see Robert made his first trade in the Millionaire Mindset Trading Group, making a $229 profit on XBP. As I said, guys, today is the final day of the birthday sale, so be sure to use code BIRTHDAY at the checkout using the link in the description below for $100 off the price of the lifetime membership or 50% off your first month of the monthly membership. But let's also talk about how hedge funds have just been hit with the 22nd consecutive month of net outflows. Again, as I touched on in a previous video, the ultra high net worth individuals and pretty much everyone out there do not like hedge funds as investments anymore. You remember that group of billionaire investors that have reduced their investments into hedge funds to new all-time lows, now mostly investing in private equity and real estate. It's because these hedge funds take way too much risk and deliver undersized returns that often don't beat the market. And we can see from this chart there's been way more outflows from these hedge funds than there have been inflows into the hedge funds in recent years. It says the hedge fund industry ended the first quarter of 2024 with net outflows totaling $25 billion. Not just a few hundred thousand or a few million or even tens or hundreds of millions of dollars, but $25 billion in one quarter. And that marks the 22nd consecutive month investors have yanked cash from the asset class, according to the latest data. So again, it seems these hedge funds are losing more and more and more money, not just from bad investments, but also from investors withdrawing cash. Ultimately, it makes their margin calls and capital requirements harder to meet. They're losing money from investments and losing money from investors. Ultimately to the point where their cash and equity reserves will continue to dwindle until they receive margin calls. And Frank has also tweeted about how China and many countries worldwide are imposing tighter hedge fund rules. So it says the Asset Management Association of China, or AMAC, has published tighter rules for the country's hedge fund sector, including an increase in the minimum asset threshold, aka an increase in capital requirements. There's also new restrictions in China on the use of derivatives and leverage, something the US markets really should also employ as well. Again, many countries worldwide have increased capital requirements due to recent failures like kohrs and also the recent banking crisis, which realistically is still ongoing. And also these hedge funds are facing new restrictions on the use of derivatives and leverage, which again just really increases the chances of hedge funds collapsing and a potential entire financial system crisis. When leverage and derivatives, which are effectively leveraged contracts, go bad, it just creates a much larger explosion and way more damage. It's exactly how kohrs went belly up and caused such an issue for many US banks. And it says the new rules also cap both total leverage and borrowing through equity-related total return swaps at 100%, while also limiting exposure to derivative like snowballs to 25% of a fund's net assets. Because again, when these hedge funds take on derivatives and leveraged positions to 200, 300 or 700% of their assets or equity, it just creates giant issues, especially when those derivative contracts go bad. Now, obviously, this is in China, so it's not too applicable to the United States just yet, but it really points out the exact risks that the US is facing as well. When US hedge funds take crazy risks on derivatives, or crazy leveraged risks, or crazy total return swap risks, and they go bad, it causes a massive amount of damage. And that's exactly why the US is also trying to consistently and constantly increase capital requirements. And yet again, we can now see another all-time high record of short interest on AMC, again in just one day, increasing from 53 million shares shorted now to 54 million. Again, these hedge funds are still pretty much shorting 1 million shares every single business day. It shows the shorts aren't covering, it shows the shorts are still adding to their short positions, and Stonks Batman has calculated the average short seller has a short entry position of around $6.50 to $7 per share, which again suggests if the AMC price increases over just $7 per share, every single short sale order is underwater. The shorts are desperately trying to hold AMC below $6 or $7 per share, and above that price, all hell starts breaking loose. And finally, Frank has tweeted about how finally the New York Stock Exchange or North America markets are moving the settlement time to T+1 from T+2, or 1 business day settlement. It says starting May 28th, 2024 in the US, certain securities will settle on 1 business day following a trade. This is obviously in the push towards T+0, which reduces the opportunities for manipulation. And as a side note, it's also good for the trades in the Millionaire Mindset Trading Group, as it means that your cash settles faster so that you can make trades more often. If you are someone with less than $25,000 in your trading account currently suffering from the PDT rule, which is where you can only make a certain number of day trades each week, this rule is brilliant for you. It means that when you use a cash account instead of a margin account, instead of waiting 2 days for your cash to settle, you now just have to wait a business day, meaning that you guys can trade more often and make more money. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.